Hi guys, you're watching Morning Trade on Money Control with me, Nandita Khemka. It's a Friday morning, and if you haven't been able to catch Jawan yet, of course you have the full weekend in front of you to catch that movie. But of course, lots of news coming from global markets this morning. Strong US data, but Wall Street was lower in trade yesterday, and Asian markets subdued. We'll be talking about all the cues and a lot of stocks that will be in focus this morning. But if you have any stock-related queries, send them in to us on our YouTube feed. We will take them up and get them addressed by our technical expert on the show, as always. But before we move any further, as usual, let's take a look at the top stories at this hour. Wall Street ends mixed as fears of the Fed hiking rates continue to pressure stocks. The Nasdaq corrects for the fourth straight session, the S&P 500 for the third, while the Dow closes with minor gains. Apple shares fall after reports that China banned iPhone use by government employees, and that stock has in fact shaved off somewhere around $200 billion from its market cap. Asian markets trade largely lower on weaker than expected Japanese GDP data and a tepid handover from Wall Street. GIFT Nifty, however, is implying a slightly higher start for the Indian market. The oil rally pauses on a stronger dollar and expectation of a decline in demand. Brent slips below $90 a barrel. The RBI will review imposition of a 10% incremental cash reserve ratio on banks today. A CNBC TV18 poll sees 50% participants expecting a reduction in the ICRR. 20% see it being entirely removed, while 30% of the participants expect it to be retained as it is. And Delhi gears up for the G20 summit. US President Joe Biden is scheduled to land for the summit later this evening. Regulations for cryptocurrencies, new focus areas for multilateral development banks, and a common framework to tackle debt and climate change are likely to top the agenda. Let me then bring on board our first guest for today. Joining me is Prateek Pant, who's the Chief Business Officer at WhiteOak Capital. Good morning, Prateek. Great to have you on the show. Let me first begin by asking you about where you think the markets are headed, given the fact that, we have once again seen gains coming in and just about, in fact, less than 2% shy of record highs. But, there is extreme volatility on the street and lots of macro cues from global markets to digest, global economy, so to say, to digest, given the fact that, there are concerns that the Fed may go in for another or a couple of more rate hikes going forward. What is your sense on where our markets are headed now?
Yeah, morning, Nandita. So clearly, as you mentioned, there is a fair bit of data to digest at this point of time. The global cues, continue to be a fairly mixed bag, if one may say right now. The Fed policy is still a little bit uncertain in terms of whether there is a pause right now or you could, go in for a couple of more rate hikes. The US economic data continues to be fairly strong. Some of these type of global macro trends will tend to look at what the immediate flows or immediate news flows in the markets is going to be. But domestically, we continue to grapple with good data out here. So it's there is nothing which has changed in our own assessment as we are looking at, some of the corporate earnings come through. You spoke about the Jawan phenomena, which will play out in some of the sectors, with multiplexes ringing well. Overall, services, hospitality, many of these sectors continue to be fairly strong at this point of time. So I guess it's going to be mixed. There will be cues from global markets which will keep coming through, but I think domestically we are holding strong right now, Nandita.
Right, of course, multiplex stocks expected to do well going forward. Before I move on to some other questions, I want to ask you, have you got the chance to catch Jawan? Any plans to do that over the weekend?
We always, any SRK movie, my wife and daughter has to drag me to, the first day show. So yes, we had our pick last evening.
Oh, great. I think I'll touch base with you for the reviews a little later. But let's talk about, what one's strategy in the market should be at the current juncture, given the fact that mid-caps are, of course, on a high. There's a party going on in the broader end of the markets. Do you think valuations have, slipped out of comfort zone? How should one approach the mid-cap space now?
Yeah, so at a broader level, I think we're still okay with the market, but there are pockets of overvaluation which we are seeing within the small and mid cap. There are initial signs of euphoria which are out there, and not necessarily the broader market going, where the earnings data is at this point of time. What we've seen is that the flows which were primarily coming in on the on the large cap is actually now very, very strong in the small and mid cap. So if you look at even domestic data, the AMFI data which comes out on mutual fund flows over the last 3 to 6 months, almost 70 to 75% of the flows are actually coming within the small and mid cap space, right? Similarly, some of the global investors have also taken fancy to the mid cap universe. So there are pockets of overvaluation out there, but then this is the time when it is a stock pickers market. So with a bottom-up stock picking approach, and there will be some pockets of opportunity, but I must say, Nandita, that pocket is becoming smaller and smaller right now.
Right, you mentioned that one should be more stock specific in this market. Are there any specific industries or sectors within the mid cap space that offer a more risk reward balance at the current juncture? And if so, which ones would you advise investors to look at?
Sure. So there are two parts out here. One, I think there have been some very interesting issuances which have happened on the primary issuances side over the last 6 months. And some of them are offering opportunities, more on the breadth side of the market. We are also seeing some interesting plays in the consumer space. Some good D2C brands on consumer side. We've seen very interesting, private hospitals, super specialized hospitals, healthcare. Those are areas again which are unique business models. These are the models which are really playing the India story, where you believe a $3 trillion economy is going to be $10 trillion. So the whole formalization space is going to play out. When you look at the whole electronic manufacturing universe, right? If we genuinely believe the flows, where India is the alternate destination is coming through right now, you will see a lot of action happening out there. So as I said, Nandita, while overall large pockets of the market could be overvalued, but there are some interesting plays within this whole formalization or new sectors which are coming up right now.
All right. Lastly, in terms of asset allocation, what would an ideal portfolio look like at the current juncture, Prateek? How much of exposure should one have to equities, and how much of exposure should one have to some safer havens like gold at this current juncture?
So see, we run a multi-cap fund, right, where we keep looking at how we value different asset classes, and within that, what type of allocation would you make, let's say, to domestic equity versus global equity. So if I had to look at my own model right now, out of about 100 rupees, we're still allocated almost 22% to gold. We are allocated roughly about 28-29% to domestic equities, about 9% to global equities. And the rest of it is on the fixed income side. Again, within fixed income, I think there is an interesting play on REITs which is available. They've had a fair bit of a price correction, if one would say, in the last 6 months. Sometimes the negative euphoria gets in, and people start discounting a lot of cash earnings negatively. So I think that is one space where you're seeing that happen right now. So I would say, we're roughly equal weight into equity, but looking in, a lot more on REITs, as well as, have a balanced approach to gold right now.
All right, that's the view on the overall market, as well as, how you should approach your portfolio at the current juncture. With that, Prateek, thanks a lot for taking our time and joining in this morning and sharing your thoughts with us. It was a pleasure chatting with you. Wish you a very happy weekend.
Thank you. Wish you the same, Nandita.
Thank you. Well, with that, let me also bring on board our technical expert for today. Joining me is Raja Venkatraman of Neotrader. As he always joins us on Friday. Good morning, Raja. Great to have you on the show. What are you making of, what's happening in the markets over the last couple of weeks? In fact, we have seen this trend of markets picking up steam in the second half of the session, and that's what happened yesterday as well. We've, breezed past that 19,700 mark. I mean, would you say that next couple of weeks will be a key determinant as to whether we will be hitting that 20,000 mark finally or not?
Yes, Nandita, good morning. And like we have been seeing, the Nifty has, on the trot, 4th successive rise few days ago, we were actually talking about lower levels in the region of around 18,800 or thereabouts. And now we are discussing about 20,000. So that's the scenario in the market. Things change quite dramatically. And from the way the markets are positioned, it's clear that there are some positive sentiments which are being extended, and probably the G20 meet is triggering some positive enthusiasm, and government favored sectors are also in demand. And we can see, especially from the PSU stables, all these sectors are getting some drift. Now, Bank Nifty was one sector which was not getting into the act, and it looks like Bank Nifty is also stepping up. A key level of 45,000 was considered as an important zone which it had to exceed, and that seems to have crossed it. So the probability, like you asked, whether we can hit 20,000 looks to be coming in the next few days. Now, to ensure that it happens, we need to ensure that Nifty moves above 19,800 and gives a closing at the end of this week. Like you can see, we have had a very successful run from lower levels. So probably we could experience some profit booking in contrast today in the second half of the day, because a lot of longs will look to exit. But then if it manages to hold above 19,800, then 20,000 definitely seems to be on the cards in the coming week. Now, when you take a look at the sectors, some of the sectors are performing well, like metals, pharma, and the PSU space. Now, if other sectors also begin to contribute, that's when we'll see an overall momentum. But then what I would like to advise all the viewers is that it's advisable to keep booking some profits, because the market definitely is not having enough internal triggers to continue, and it will look towards the overseas cues also to gauge the further momentum.
All right, that's the view then on the markets. But let me talk about the stock of the day now. Ashok Leyland, this is one stock that has been fairly volatile over the past 1 month, has lost some bit of steam, but nevertheless, it is approaching its 52-week highs now. There is, of course, the company's EV arm has unveiled a new electric commercial vehicle, and in fact the company has said, the management has given certain bullish commentary going forward that it will be among the top 10 global CV makers over the next few years, and it is looking to launch alternate fuel option models also over the next 3 to 5 years. Looking at the charts of Ashok Leyland, how should one approach this now, Raja?
Yeah, so Ashok Leyland definitely has been in the news, and especially when the news flow announced that the government is going to allot the electric vehicle, and the sector itself, the sector play dragged it from 140 levels to around 190 levels. Now, over the last 1 month, if you will observe, the stock has not really done much. And the stock is showing signs of tiring out, and probably these news flows are hoping to generate some positive enthusiasm. But then if you're holding Ashok Leyland at the current juncture, it would be a good time to exit the stock and look for lower levels to buy into. I would not be a buyer in Ashok Leyland at the moment.
All right, avoid Ashok Leyland at the moment, but let's talk about L&T. Now, this stock was up somewhere around 4% yesterday. Of course, there are reports that it has won a mega deal from Aramco worth 24,000 crore rupees. There hasn't been an official announcement yet, but we've had some brokerage views coming in on the stock with brokerages maintaining their buy rating and increasing target price on the stock. But CLSA believes that the target price on the stock should be somewhere around 3,240 rupees per share at the current juncture. And Citi, in fact, has a buy rating target price raised to 3,175 rupees per share. And it has, it believes that the stock is actually up for re-rating going forward. 4% up on this counter yesterday. There have been quite a few order wins as well. Should one look at, booking profits at higher levels, or should one hold on to it for more upside going forward? How should one approach this one?
Yeah, in contrast to the earlier stock which we discussed, Ashok Leyland, this stock too spent the similar time in consolidation. But then what has happened is this positive news flow has given a very strong move to the upside, and it has triggered some fresh momentum. So one should definitely consider the stock at current juncture, and the probability of going towards 3,500 in the next 3 months is very much on the cards. Now, when you take yesterday, this was one of the stock also which ensured that the market, it gives a leg up to the market. And I'm sure that the positive momentum has just started. So one can look to buy at current levels, use dip towards 2,800 to 2,750 to buy in. And the momentum definitely has just kicked in.
All right, let's also talk about some of the shipbuilders. Of course, they had a field day in trade yesterday. The likes of Mazagon Dock gaining 10%. You had Cochin Shipyard gaining 20% or thereabouts. Now, post markets, there is news flow about Mazagon Dock as well. It has signed a master ship repair agreement with the US government. It's a non-financial deal to open up voyage repairs of US Navy ships. But given the kind of up move one has seen on some of these stocks, where are they headed from here? More upside, or do you think it's due to fizzle out going forward?
Yeah, so interestingly, you have been asking me stocks which have spent quite a bit of time in consolidation, and a consolidation at higher levels and a breakout upwards is definitely a sign of further bullish enthusiasm. Yes, we may say that yes, there is euphoria, etc. But then I always believe that one should play the market rather than worry about whether it will reverse from here. So the scenario right now is that it's given a nice move. One should look to buy at current levels because the move has just begun yesterday, and the positive news flow is also adding to further tailwinds in the stock.
All right, that's the view on the shipbuilders like Cochin Shipyard, Mazagon Dock going forward. But let's take up some viewer queries then that are trickling in this morning. First of all, query coming in from Parth Chaudhary on Deepak Fertilizer. Now, this stock also has been in an uptrend, and last 1 month we've seen gains of somewhere around 20% or thereabouts. Should one buy into it now or wait for dips?
No, this stock definitely has witnessed structural damage around 6 months back. And then the stock has really consolidated at lower levels, making a very nice base at around 540 levels. And the current positive momentum which we are seeing in the chemical fertilizer space after a very long time is added to this fuel. This stock in its heydays did exceedingly well, and it has once again started showing signs of positive momentum. It's a very good time to invest into this counter with a target towards 750 within the next 3 months.
All right, that's the view on Deepak Fertilizer. Hope that answers your query. Let's take up a query on Devyani International then. This stock has hit a fresh high yesterday, somewhere around 6% up or thereabouts. Saurabh wants to know whether or not it's the right time to sell.
See, this counter has definitely shown some upward momentum. But then what we need to consider is that how to handle this current scenario. Because at the current moment, it is not expecting much positive news flow. So whatever news flow has come in has already moved in here. So it is a good time to book some profits and use the dips to buy into. And that's what I would suggest in Devyani International at the moment.
All right, that's the view on Devyani. Hope that answers your query. But let's take up a query on the IT pack. Arnav Sharma wants to know your thoughts on Tech Mahindra. But I also want to get in your thoughts on HCL Tech, given the fact that, steady order inflows and some of these tech giants have seen a very good comeback after, disappointing first quarter numbers drove some of these stocks lower. We have seen a good recovery coming in. So, thoughts on Tech Mahindra as well as HCL Tech on the charts.
Yeah, I have been circumspect on the tech space, but then they have been finding some value at lower levels, and that's what happened in Tech Mahindra as well. The dips in July saw some good buying coming in from around 1100 levels, and it's steadily moving higher. Now, yes, there are the target zones immediately for Tech Mahindra is around 1300 on the immediate front if you take from the next 2-3 weeks perspective, but solely you should treat all the IT stocks as a trading bet rather than a investing bet.
All right. You can look at these counters as a trading bet now. But, there is a query from a stock from the mid-cap IT space as well. Vishal wants to know your thoughts on Nucleus Soft. Yesterday it was under a bit of selling pressure, but last 5 days it has given decent 7% returns. Should one look at mid-cap IT as well as a trading bet?
Yeah, so mid-cap IT definitely is a good trading bet. And yes, Nucleus Software is actually undergoing some consolidation here. And this stock doesn't merit exiting at the moment. But yes, if you are going to have a risk purview in place, then 990 would be a very good risk below which you should exit your position.
All right.
You can continue to hold on because the first target is emerging around 1250.
Okay, that's the call then. Hope that answers your query. But before I take up the next query, I want to speak about Landmark Cars. This stock is in focus this morning. It has signed a letter of intent with M&M for opening dealership in West Bengal, in Howrah. And it will be carrying on the sales, after sales of M&M's personal pickup and, other super vehicles. Looking at Landmark Cars, it hasn't done much over the last 1 month at least, and in fact 6 months it has given a good 30% returns. But on the charts, where do you expect this counter to head? 780 is the 52-week high, and it's somewhere around 725 at the current level.
Yeah, so the news flow is definitely positive. And after debuting last December, the stock has slowly moved up. But then this stock is not having enough momentum signals which will drive it higher. So right now, this positive news flow could trigger a move, and one should stay alert for a move above 750 levels, where it could set some tone towards 1000 within the next 3 months.
All right, that's the call on Landmark Cars. But there is a query coming in on Indigo. Nisha Pradeep wants to know your thoughts on this one. There are concerns of lower yields and higher, crude prices driving ATF prices higher. But, given the fact that airfares are soaring, where do you expect Indigo to head from here, and how should one trade into this counter?
Yeah, see, if you take a look at the journey of Indigo, it's always, these kind of news flows have always been questioned. But then the thing is that with the shortage of airlines in the country and quality services, Indigo is definitely having the best of both worlds. So I think that this stock is a good investment bet. One should look to buy it at current levels, use dips to buy into, because this airline is set to move towards 3,500 by the end of this year.
Right, that's the view on Interglobe. Hope that answers your query. But Debu K wants to know your thoughts on a Ratan India. This stock has been on a tear. I think every other day you see this emerge as the top mover on the Nifty 500 index. Is there a trade here, Ratan India?
See, this stock actually waxes and wanes. So it is not, it's a stock where you got to invest and hold on to for a long period of time. So if you're having the patience to hold on to this stock, then fine, because the stock also underwent through a lot of pain, and we are seeing the momentum building up right now, and it's challenging the 2021 highs. Now, always at important highs, we will see some profit booking. So it would not be a good time to enter. Look for lower levels around, say, maybe 50 to buy into.
All right, that's the view then. But I want to take up a query on ONGC. Shweta wants to know your thoughts on this. Given the fact that crude prices are once again around that $90 mark, would you expect ONGC and Oil India's and GAIL's to head higher from here, or is it time to book profits into these counters?
Yeah, the crude prices are definitely driven the ONGC prices up. So now, like you rightly said, it has entered a profit booking zone. So those who have already taken a trade or holding investment positions should book some profits here and wait for ONGC to give a weekly closing above 185. I would consider 185 as an important zone because it's come firmly there. It's the end of the week. So I would wait for 185 to be exceeded for me to add fresh positions into ONGC.
All right, that's the view on ONGC then. But one last query then. This one is on Sun Pharma coming in from Manish Kumar. So Pharma Pack, has been doing well, but in between sessions, it comes under a fair bit of selling pressure. In the Pharma Pack, Cipla, Sun Pharma, Lupin, any of these stocks looking attractive on the charts?
Yeah, so amongst the pharma pack, I feel that the Lupin and Glenmark have got a better setup. Yes, Sun Pharma definitely looks encouraging, but then it would come third in the order. So I would first place Lupin, then Glenmark, then Sun Pharma.
All right, that's the view on the Pharma Pack then. But with that, I think we've run out of time and we are concluding the queries segment for this morning. But Raja, before I let you go, any recommendations for our viewers this morning?
Yeah, I would look to give, again, considering the nature of the market, we'll definitely go with the long side. I would like to go with the long in Adani Port at current levels with a stop at 804 for a target towards 830 and 840. And my second recommendation would be a buy in Lupin at current levels with a stop loss at 1130 for a target towards 1165 and 1178.
All right, Adani Port and Lupin, two recommendations coming in from Raja. With that, Raja, thanks a lot for taking out time and joining in this morning and addressing all of your queries as well. Well, with that, we've come to the end of this edition of Morning Trade. From me and the entire team, thanks a lot for watching. You have a great weekend, but don't go anywhere just yet because coming up next is Opening Bell.